Hey everyone, and welcome to today's deep dive. We're going to be getting into taxes.
Oh, fine.
I know, right? But specifically, we're going to be talking about something called a step up in basis. It's one of
Yes.
those things that sounds.
Really scary.
Yeah,
Like, I don't even know what that means.
exactly. But it can actually save you a ton of money,
Okay, I'm letting
especially
it.
when you're dealing with inheritances.
Right.
So, we're going to be taking a look at an article from Skloff Financial Group,
Hmm.
and it's called How a Step Up in Basis Can Be a Tax Dream Part 2.
Okay.
And they use this example of inheriting a house,
Okay.
which I think is something a lot of people can relate to, you know?
For sure.
You inherit the house you grew up in, you
Yeah.
know? Sounds pretty awesome, right?
Yeah.
But what happens if you have to sell it?
Oh, yeah, that's a good point.
So that's where the step up in basis comes in.
Okay, so tell me, how does that work?
So basically, over time, the value of a house usually goes up, right?
Right. Yeah, of course.
So let's say your parents bought it way back when for $100,000.
Yeah.
And now it's worth $11,100,000.
Whoa. Okay. Big difference.
Huge difference.
Yeah.
So if you sell it, you're making a pretty big profit.
Yeah, you would think you'd have to pay taxes on that.
And you're right, normally you would, and that's what's called capital gains tax.
Okay, capital gains tax.
So how does the step up in basis play into all of this?
Yeah, I'm still a little confused.
Yeah. So basically the step up in basis is saying, hey, we get it. This house is worth a lot more now
Right.
than when your parents bought it.
Yeah, makes sense.
So when you inherit it, the value of the house basically steps up to the market value at the time that you inherit it.
Oh, okay.
So in our example,
Okay.
the $11,100,000, that would be your new cost basis.
So it's like you're resetting what you paid for it.
Exactly. It's like the IRS is giving you a fresh start
Wow.
with the value of the house,
Interesting. Okay.
which makes a huge difference when you go to sell it.
Yeah, I bet.
So let's say you inherit the house and you decide to sell it right away
Okay.
because of the step up in basis.
Yeah.
Your cost basis is that $11,100,000.
Right.
So you're essentially selling it for what you paid for it.
Okay.
So no profit
No profit.
and no capital gains tax.
Wow. That's amazing.
I know, right?
That's a good deal.
But what if instead of inheriting it, your parents decide to gift you the house
Oh, interesting. Okay.
before they pass away?
Yeah. Does the step up in basis still apply?
Oh, that's a great question. And that's where it can get a little bit tricky.
Oh, boy. I was afraid you were going to say that.
Because the step up in basis only applies to inherited assets,
Gotcha.
not gifted ones.
Okay.
And the article goes into a few different scenarios.
Okay. Let's hear it.
To illustrate this point, and in scenario one, they say, let's say your parents gift you the house,
Mm-hmm.
and then you decide to sell it within a year.
All right. What happens then? Well, this is where you could run into some trouble.
Oh, no.
Yeah. This is what the article calls a potential tax nightmare. Remember that profit we were talking about, like the $1 million?
Yeah.
You could end up having to pay taxes on that whole amount.
Oh, wow.
The article estimates it could be as high as $408,000.
Ouch.
Yeah.
So what if you decide to hold on to the house for a while? Does
Yeah.
that make a difference?
It might.
Okay.
It might lower the taxes, but it might not be as much as you'd like.
Okay.
That's what scenario 2 is all about. Holding on to the house for more than a year
Okay.
before you sell it. And in this case, the taxes are going to be a little less,
Okay.
but they're still going to be pretty bad.
Okay.
They're estimating it would be around $238,000.
So you're still looking at a pretty hefty tax bill.
Yeah, unfortunately.
Okay. But going back to that third scenario,
Yeah,
where you inherit the house and you sell it right away,
right.
that's where that step up in basis really shines.
Exactly, because like we were saying before,
Yeah.
the value of the house is reset for tax purposes.
Yeah.
So when you inherit it, your cost basis is already that stepped up amount, right?
So you're basically selling it for what you paid for it.
So no capital gains.
Exactly.
Wow, that's a huge difference.
It really is.
So does this step up in basis only work with real estate?
That's a good question.
Like what if you inherit stocks
Yeah.
or a family business or something like that?
Well, actually, the step up in basis applies to a lot of different assets,
Oh, okay.
not just real estate.
Wow.
Yeah, so things like stocks, bonds,
Okay.
even a family business.
Oh, wow.
Think about it. If your parents bought Apple stock back when it first came out,
Yeah,
and now you inherit it,
right.
that value has probably gone way up.
Yeah, for sure.
So the step up in basis can really help you out.
Protect you from that big tax bill.
Exactly.
So this is something that could affect a lot of people.
Absolutely anyone who inherits assets.
Yeah, and the potential savings could
Right.
be really significant.
Oh, yeah. Especially if you're talking about valuable assets that have been around for a while.
Yeah. This is really important information.
It is.
It can get pretty complicated, though. Yeah. Taxes are tricky.
Yeah, and tax laws can change.
Exactly.
I think I'd feel a lot better
Yeah.
having a financial advisor help me sort through all this.
I mean, this deep dive is great for getting the basics,
Mm-hmm.
but everyone's situation is different.
Right.
And like you said, tax laws, they change all the time.
Yeah.
A financial advisor can really help you figure out the specifics.
Make sure you're taking advantage of all the rules
Exactly.
and create a plan that works for you.
It's all about having a solid financial plan.
Right. So this step up in basis, it's an important thing to know about. But it's just one part of the whole financial planning picture.
Exactly. You got to look at the big picture.
Right. It's not just about minimizing taxes.
Yeah.
It's also about building wealth.
Yeah. And protecting your assets.
Yeah. And making sure that you're making smart decisions.
For your future.
Exactly. And I think it's really reassuring to know that we don't have to figure all of this out on our own.
Definitely not. There are experts out there who can help.
Right. And talking to a financial advisor, it's not a sign of weakness.
Oh, no, not at all.
It means you're taking your financial future seriously.
It's a sign of being responsible.
Yeah, exactly.
It's like having a co-pilot on your financial journey.
I like that.
So as we're wrapping up this part of the deep dive,
Yeah.
is there anything else about the step up in basis
Mm-hmm.
that you think our listeners should know? You know, it's a great tool, but it's not always the answer.
Right.
It's important to remember that.
Yeah. It's easy to get caught up in, oh, no taxes.
Right, exactly.
But you got to think long term, too.
Exactly.
Yeah.
Sometimes it might make more sense to hold on to an asset,
Okay.
even if it means you'll eventually have to pay some taxes.
So it's really about making the best decision for your own situation.
Exactly. And that's why it's
Yeah.
so important to talk to a financial advisor.
They can help you weigh all the options.
Exactly. They can help you figure out
Yeah.
what's going to be the best move for you in the long run.
Really guide you through the process.
Exactly.
So it's not just about understanding these rules.
Yeah.
It's about making smart decisions
Yeah.
based on your own goals.
Exactly. You got it.
Before we wrap up this deep dive,
Yeah.
is there anything else you think our listeners should keep in mind?
Well, you know, we've been talking a lot about getting professional advice,
Right?
but I think there's something else that's really important.
Okay, what's that?
Communication.
Okay.
Think about it.
Mm.
You inherit something valuable from your parents,
Mm-hmm.
but you have no idea what they wanted you to do with it.
Yeah.
That could cause a lot of problems.
Yeah, you could end up making the wrong decisions.
Exactly. So it's not just about the money.
Right.
It's also about understanding
Mm-hmm.
what your family wants.
Yeah, what their wishes are.
Exactly. Having those conversations ahead of time
Yep.
can really make things easier down the road.
It's almost like planning ahead is a gift in itself.
That's a great way to put it.
Not just for you, but for your family.
Absolutely.
So as we wrap up our deep dive on the step up in basis, I hope you're leaving with a better understanding of this tax rule, but also a better understanding of
Yeah.
the importance of communication
Absolutely.
and planning when
Yeah.
it comes to your finances.
Couldn't have said it better myself.
Thanks for joining us today, and until next time, happy planning.